Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the CBOE Volatility Index. That's ticker symbol VIX. And as I zoom in here, you'll see that I left my lines on the chart from last week, so you can see how things worked out with regard to our forecast. Now, the VIX is following along with the forecast precisely, and while we did not hit the targets on the other markets, the diamonds, the spiders, the Russell 2000, and the Qs, I will say we did not hit our target numbers yet. And as you will see, the technical charts are very reliable. I said last week that the VIX would most likely move lower to test this support level, and I drew that horizontal line from the low back here on May 22nd. And what happened? We did move lower Monday, Tuesday, Wednesday. Thursday, we formed a green candle. And today, Friday, as I record this on Equinox the 21st, you can see that today's low hit that support level and we closed up on the high. Now, that is a bullish sign for the VIX. If you've been following along with the Market Guys reports, you'll know that the Volatility Index is inversely related to the S&P. So I am going to leave these lines in place with the end of that line right there being my target level for next week. So I'm just going to leave that just the way it is. Now let's go right to the S&P 500 ETF, which is the spiders. You can see that my lines are on the chart from last week. We did not move lower as I expected. So I'm just going to erase that and watch what I'm going to do. Watch very closely. You can see this is known as a hanging man. This is a doji. Notice the long shadow above that candle. That is bearish. Notice also that there is a gap down here. On Tuesday, the market's gapped up. I'm going to draw a horizontal line from that, because 80% of the time, again, this is the gap fill rules, 80% of the time, gaps will fill, and then after they fill, 80% of the time, we generally see a reversal in the price. So this is going to be my forecast for next week. Keep a close eye on the markets. I know we rallied, and it's a crazy week with the Fed talking about lower interest rates and possible offensive attack on Iran after they downed 2 U.S. drones. And you would think normally that would be enough to collapse the market. And what happens? The market actually rallied on that news. It's very confusing for a lot of people because the news is so unpredictable. When you're trying to forecast Donald Trump's tweets or trying to forecast what the House is going to do in Congress or what President Xi is going to do in China with the trade war. We don't know, but we can lean and rely on these charts. So while we don't hit our target numbers all the time, they are extremely reliable. So count on those, especially as a risk management tool. So that's my forecast for the spiders. If I look at the diamonds, that's ticker symbol DIA. This is the Dow Jones Industrial Average ETF. It's basically going to be the same story as the S&P. I'm just going to move this line over. You can see that from the candles, we have a doji yesterday on the 20th. Today, this is an inverted hammer. Again, that long shadow above the market is very bearish, and we have an open gap below the market. That is going to be our new target price. Again, I think the Dow is going to move lower, fill that gap, and then possibly bounce. Also notice down here, there's a gap support level right there, right around 253.60. And if I go even further down, you'll see there's another gap that's open down there at that support level, right around 249.66. So for the short term, I think we're going to fill this gap first. We'll have to see whether or not the other gaps fill. But again, following the gap fill rules, 80% of the time gaps do fill. Looking at a more broad-based market in the Russell 2000, you can see that this one was the most bearish. And this is, 2,000 stocks that we're tracking here. This was an extremely long red candle. And today, the stochastics right there crossed with a sell signal. The CCI As soon as that crosses below the 100 mark, that will generate a sell signal. Now, last week I said that the CCI would move lower. It didn't, but I'm going to forecast that the CCI is going to go lower after it generates that sell signal. So I'll erase this line, and I'm going to tell you that I should actually erase all the lines, but I'm going to erase this support level, which was former resistance, because I think that the market will break right down below that and move closer to that 20-period moving average. So out of the major markets, I am the most bearish on the Russell 2000. Now, if we look at the Qs, which is the QQQ basically representing the tech sector, again, same thing. Look at the stochastics. First thing, we are just about crossing with a sell signal, and that is an extremely overbought condition right there, with the stochastics way over 80 on that scale from 0 to 100. And the CCI is also overbought. This is known as a doji. Let me zoom in there for you so you can see that. That is a perfect cross. That's when the opening price is equal to the closing price. Those are usually found at pivot points. If I go back, look at this doji. Very similar. This had a longer shadow above the candle there. This doesn't have as long of a shadow, but these are both two perfect dojis. After this doji that formed on the 17th, what happened? The market completely tanked and took a big dump as investors were very stressed out. I do think that could happen again, so I'm going to erase this previous forecast line. I'm going to erase this support level because, again, I think it's going to blow right through that, and I'm going to mark this gap fill point as the new support level. So I think that the Qs are going to move right down to that. On Monday the 24th, we are having our open house Q&A session. If you'd like to participate in that, it's free. It's open to the public. Just go to themarketguys.com, scroll down, and right there you will see the link where you can save your seat. Just click on that link. Just put in your name and quick information. We do not resell or spam anybody, so understand that we are going to keep your information totally secure. I very rarely put out announcements, as you may have experienced already and know that. I will be analyzing stocks, answering questions, and we're going to have an action-packed hour from 8 to 9 p.m. on Monday the 24th. So hopefully I'll be able to see you there. Again, just register, save your seat. Our system will send you a reminder in case you forget. And if you do forget, understand members get the recording so you can listen to that at a later time. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.